to another episode of Options Discovery. Today I'm sitting down with Jonathan Zaionz, a senior derivatives analyst at Cboe Global Markets. Jonathan, can you give us an overview of your background and how you got to where you are today?
Absolutely. Firstly, thank you for having me. So my background is I have a degree in mathematical finance. Um, my love for derivatives really started probably about 5 or 6 years ago. One of my summer internships, I worked as a trader in the volatility risk premium group at a family office. Since then, I really loved everything you could do with options specifically. I thought it was insanely interesting. So, I went and took some more courses focused around options. When I graduated, I had a couple roles in ETF research or equity research and in private equity. And then about 2 years ago, Cboe approached me for the role that I have right now. And, I felt like it was so cool to have an opportunity to work at the world's largest options exchange. And since the last 2 years, I've been here and it's been great.
And just to talk about some of your more recent work with Cboe, I know you had a paper that was recently published, which is the rise of SPX and zero DT options. What topics does this paper cover?
So this paper is really meant to cover everything, down to brass tacks to a little bit more complicated things that we've been seeing in the trends with zero DTE. There's been a lot of misinformation that's been out there, and I really just wanted to have one piece where people who were trading the product or were interested in trading the product could come to, kind of figure out really what's going on. Why has the growth happened so quickly and in so much volume? The people they can go see the volume trends, open interest trends in SPX. We talk about really the benefits of short dated options. We talk about costs to trade it versus some comparable products and really some phenomenons we've been seeing since they started about 15 months ago or so.
Yeah, so this is a very comprehensive paper, it seems. What kind of audience do you think would benefit the most from the information in this report?
So I really wanted some people to be able to get something out of it, no matter where they were in the world, whether they were a retail trader, whether they worked at a hedge fund, institutional traders, whatever it was. I think there really is something in there for everyone. Um, I wanted people to just have a clear focus on what's happening in the world of zero DTE. We're the ones, we're the exchange, we're the ones who really started the zero DTE trend. I wanted us to have really something out there that everyone could get something out of.
Yeah. And I know this paper provides plenty of statistical information on SPX and zero DT options. In your research, what struck you as some of the most relevant data about the growth of zero DTE options?
I think the most interesting thing to me is really just, the breadth of strategies that our users are taking when they're trading zero DTE. The old wisdom will tell you that retail traders are only buying options and dealers are only selling options. But in reality, that's not the case at all. We see all types of traders doing different things, whether that's trading call spreads, put spreads, iron condors, butterflies, or just hedging delta outright in their portfolio. The use cases in this product really just show how versatile it is.
Yeah, it was really great hearing a little bit more about your background in the derivatives industry, as well as your paper, which kind of highlights zero DT options, which is actually the main topic of our conversation today. And just to get right into it, can you tell us more about the history of Cboe introducing short-dated options and how this led to the rise of zero DTE trading?
Absolutely. So back in 2005, Cboe listed the SPXW Friday expiries. So that was in addition to the already monthly, quarterly, and annual expiries that they had in SPX. And this was really on the back of customer demand. Our customers wanted to be able to hedge their portfolios or trade more tactically than the monthly options offered at the time. So we launched the weekly options. That's where the name weekly comes from, because they were every week at one point in time. And then from 2005, fast forward 11 years to 2016, the shorter dated trend started to really take force. Zero DTE volume and shorter dated volume really started increasing in the grand scheme of total SPX volume. So our customers demanded, more tactical abilities. They wanted more frequent expiries, which led us to launching the Monday, Wednesday expiries in 2016. And then in 2017 to 2021, the shorter dated trend continued. We kept getting customer demand to launch the Tuesday, Thursdays, and finally we did in 2022. And since then, the volume has just been off the charts. We've been seeing the widest breadth of users we have in this product ever. There are so many different types of traders and investors really utilizing this product in their portfolio. And who knows where the next year will take us, but the last year has really been amazing.
Yeah, as you were saying, I know zero TT options trading has become a lot more popular in the last year. What are some misconceptions surrounding this trading strategy?
So I mentioned it briefly before, but I think one of the most common misconceptions are that customers are really only buying options, which leads to dealers just being short options. And then as the market moves around, the dealers would need to hedge their exposure, and that would cause further movements in the market. In reality, this is not what we're seeing at all. I've done a lot of research into this. Other people on my team have done a lot of research into this, and the customer flow is insanely balanced. In the paper, I mentioned June 15th, which is the second largest SPX volume day ever. Something like 4 million contracts traded that day, and 1.3 or 1.5 million zero DT. I don't remember the number off the top of my head right now. But if you looked at the customer volume and you really broke out buys versus sells, only 80 basis points of volume was net bought. And that was spread out across calls and puts and spread out across all the strikes. So the flow is really balanced very closely. And you see customers getting in on both sides of the trade. The second one I would say is that, zero DTE is moving the market. Market volatility is not a new concept. I think that people are pointing to this when there's an intraday move. There's a lot of zero DTE volume, let's say on a reversal kind of day. We've done also a lot of research into this, and we see no evidence of it given the balanced nature of the flow. The market makers being net long, going to net short a few hundred contracts, really, even though gross volumes are so high, are not moving the market at all. And volatility has existed forever. We're actually, working on a follow-up piece right now that really drills down to that more over the last 10 or 15 years. But the numbers early in the beginning are looking like not much has changed. The zero DTE volume around the days that are volatile is really just as a result of the volatility. It's not the other way around.
Yeah, so now that we have a little bit of history and background on zero DT options, what are some of the main benefits of these options and how can they be used to hedge trading positions?
Absolutely. So SPX in general offers its users many options that not physically settled options, such as single name equities and ETF options do not offer. The main ones are the European style settlement. So you're not going to get assigned on your short position early. You also have the cash settlement, which means at expiry, if your position is in the money, you'll just settle up with the cash balance in your account. You're not all of a sudden going to be long or short hundreds of shares in the underlying that you're then going to have to trade out of or trade around, whatever it is. Another benefit that's lesser known in these options are that after the close with physically settled options, so let's say you're long the 400, let's say you're short the 400 SPY put that expires that day, and the market closes at 401. SPY closes at 401. Let's say after the close at 4:30, some negative news comes out. The market makers are actually allowed to exercise their out of the money options until 5:30 p.m. So they could actually assign you a long position in SPY at 400, even though SPY closed at 401. And then let's say the news was very negative, the market opens up negative the next day, you have a loss on your position that at the time of expiry was out of the money, but you were still assigned given this rule. With SPX or XSP, which is the mini SPX, this doesn't happen. At the close, 4 o'clock, it's done. You can't get assigned on anything. There's 4 o'clock and we're done. And sorry, what was the second question you asked there?
And how can they be used to hedge trading positions?
So people use these to really hedge the delta in their portfolios. Let's say I have a very long portfolio, and there's a CPI announcement today, and I think that it's going to come out hotter than people expected, and then the market's going to fall. Instead of selling out of my long positions, which there's a cost of doing trading, it might be a taxable event if I have an unrealized capital gain. I can trade these super short dated options to protect myself. And instead of trading longer dated options where I might have to pay a significant amount in time premium, I can trade super short dated, not pay much in time premium, and really be able to protect myself without having to realize those gains in my long portfolio or trade out of those positions.
Yeah, and just to dig a little bit deeper into the benefits, how do they differ on the buy side versus sell side of zero DTE options trading?
Absolutely. So the buy side, that would be the example that I gave before. People wanting to buy puts or buy calls to trade tactically around events, to trade tactically on a specific day. If you think the market is going to go up specifically on this day, but you don't want to go buy a bunch of stock or buy a bunch of ETFs, whatever it is, you can trade very short dated, and for a relatively cheap amount of money to trading longer dated. And on the sell side, it's the people who are trying to harvest options premium. So we typically see it in the form of selling put spreads or selling call spreads or selling iron condors, which is just a combination of a call spread and a put spread, to over time harvest the insurance that people are willing to pay for their portfolios, or to harvest the volatility risk premium, as we call it.
Yeah, it's really interesting to see how those benefits can differ based on which side you're on, I guess. And to talk more about some of the different components of these options, what are characteristics that traders should look for in the underlying assets when trading zero DTE options?
So I think the most important thing, or one of the most important things that traders need to look for, is liquidity. Given the short-dated nature of these products, you need something that is very liquid, that you can trade in and out of quickly, efficiently, with close to the midpoint. And SPX definitely offers that. It is one of, if not the most liquid options products in the entire world. So it offers all of its users that great liquidity that I think is important. The other ones are really what we touched on before. That isn't necessarily specific to zero DTE, but the European style cash settlement really offers benefits to all users. Not getting assigned early, or not getting assigned shares, really just making the settlement process easy.
Yeah, and I know earlier in our conversation we talked about some of the advantages of zero DTE trading. Let's switch gears a little bit here. Can you talk more about some of the risks faced in zero DTE options trading?
Absolutely. So zero DTE options, just like any other asset class, whether that be longer dated options, equities, bonds, treasuries, whatever it is, there's risk associated in trading them. There's no free lunch, definitely. I think the most important thing is investor education, and not trading beyond the means of your portfolio. Being careful, knowing what you want to do. But really, education, I think, is the most important thing to make sure that you're utilizing these products effectively.
Well, that kind of concludes my main questions about zero DTE options. I have a few final questions just to wrap up our conversation a little bit here. The first one
Absolutely.
being, what are some of the most important lessons you've learned while working with derivatives in your career?
So I'd say the most important thing is that things are always changing very quickly. If you asked me 18 months ago if I thought we'd be trading 1.5 million zero DTE contract or SPX zero DTE contracts every day, I would have told you were crazy. So I think the most important thing is always staying on top of trends, really always going out of your way to try to do something that no one else is doing, whether that be analyzing something a different way or utilizing something a different way. I think, that's the way that you can get the most out of it. And that's the most important thing.
And what advice would you pass along to somebody who's looking to get started?
I'd say be curious, keep up with the trends, try to get ahead of the trends if you can. Talk to people, ask questions. Things are always changing, and having ideas is super important. So try to start that early on.
And I know every week we choose a different topic for the show. Do you have any recommendations for a topic that we could cover next just to learn more about options?
So I think an interesting space that people have starting to be more interested in lately is the vol space. VIX options volumes are up this year. They're actually on pace for a record. We're seeing a similar breadth and depth of users trading that product with interesting strategies as well. So I think that could be a really interesting topic for you to follow up on the growth in zero DTE and SPX.
Well, thank you so much for coming on the show today and sharing your knowledge about zero DTE options.
Absolutely. Thank you so much for having me.
If you're hungry for more options content, make sure to subscribe to the JLN YouTube channel and check out our social media accounts. Be sure to check out our website, johnlothiannews.com, Markets Wiki, and the John Lothian newsletter for more content.